Ahoy there traders, and welcome to the Anti-Investor Edge for Monday, the 22nd. After a long weekend is over, the peace deal looks like it might already be in tatters. Hummers has reclosed, the usual threats are flying around via tweets like a toddler who's found the caps lock key. Starmer has resigned as the UK Prime Minister, which I suspect is going to make a lot of people very, very happy. The markets aren't even open yet, and there is a whiff of bovine outputs already in the air. So let's set the table and then we'll walk through the charts. So a bit more of the backdrop before the charts. The pre-market futures jumped a little bit at the open, but they're sitting there pretty much in their normal meh French shoulder shrugging ranges. So there's not really a lot to read into them despite everyone's best efforts. There is an inflation print lurking later this week that won't really blink, and that's worth keeping an eye on. But honestly, the plan is the plan, the same as ever. Nothing too exciting to infer from the pre-market, so we just follow the setups and make some moolah. So let's get into it. Let's get our bearings. The futures are nudging up, as we can see here in the pre-market, so it's not really telling us much that we can't already infer from the markets. They're kind of in range with normal overnight movements. That 0.3 to 0.6 range is kind of normal on the main indexes. The bigger tell is that the VIX is ticking up on the weekend chaos. It is just jumping up just ever so slightly there. Again, nothing too exciting or revolutionary really. Gold is firm after a pop before the open. We can see it's just pushing higher ever so slightly, and Bitcoin is quietly stepping away from that 60,000 zone, just making those higher lows still. The VWAP off the low there is just holding as support for the moment. So onto the SPX. The decision last week to keep the bears on a tight leash because of that MACD extreme was exactly the right thing to do, and that short-term bear move, still taking the trades but just really keeping them on a tight leash, was exactly the right thing to do. Now, the software is always in development, and the work to actually build that decision into the software is ongoing. It's coming along very nicely, along with 30 plus other features that are coming along with the software. Hopefully we'll have a first version later this week that you can all take advantage of. Now from here, the level that I'm watching is 75.80, just above these recent highs here. This is what the MACD was telling us. We can see a little bit of a push lower, but that pop higher, this is actually a continuation signal. So when or if we go above that level, we could see a strong push higher. And again, we commented on that for most of last week. Uncle Russell, one of my other favourites, we can see that this consolidation continues to hold firm for the moment, and because of that, it's a lot easier to read because of those consolidation levels. Price did peekaboo ever so slightly, just, oops, was the wrong button there. Just a little bit lower. Price peekabooed below the range. Just about there for a little bit, and then pushed basically back inside. Price, because the markets pre-markets are just meandering, we're probably going to open up inside that range again. What we do want to keep an eye on is, again, we've got that same situation here. We've got percentage R just saying that we're in a bullish extreme, and this can potentially indicate the stronger move higher, and as we're still in the range there, I'm not yet convinced. So again, push through the range highs, new all-time highs again, and what we could see is some face-ripping moves higher again there, which we have seen when those new all-time highs are made. Now, crude popped a little bit higher on the weekend open, and we can see what some people might call this head and shoulders pattern. Again, we can see quite a clear pattern. One of the things to keep in mind is that these levels, or these patterns rather, can evolve and mutate, which we'll talk about in a moment. But price is stalling at those March 10th lows, which you can see just there by that purple line, and then we can see it on the lower time frame here, just making that pattern below there. So we could argue that price support is becoming resistance, and if that's the case, the push down to the the $65 level, 6,500, that would be a little bit of a push higher, wouldn't it? $65 level to push lower, that target that we looked at a couple of weeks ago now could well be on the table. Gold has been very kind to me. One of the things that I did look at on Thursday, Friday, again, I appreciate the market was officially closed. Some of the futures were open, this being one of them. I ended up taking a nice little speculative trade. Again, I've already got my early bull trade on there, which is underwater. These are with credits and debit spreads, just for reference. So again, I took another speculative bull trade just off the lows there, pretty much on the kind of like thinking about this being, if anyone's long from this level, this is possibly stock running, or liquidity grab as the kids like to call it these days. But we could see price just come back to that level and making these high lows. We can see the same pattern in development. So again, just a debit spread was used, actually, just a little bit of a push higher, and again, that's actually cashed out. And what that does for me is, while this trade over here, the early bull swing that I mentioned last week, is on, this trade actually de-risks it. So whatever happens next doesn't really make a great deal of difference. If we do get the push higher, I'll be looking to compound into movements as usual. But for the moment, that prior trade is ultimately de-risked. One of the things that we could see here as well is we do have this 60-minute area could develop a consolidation zone, and we've got price just ping-ponging back and forth. So we could see price just contained within these levels in the same way that we speculated on that range up at the $4,900 level, doing the same thing. So we've got patterns within patterns for them. So we can say that we're at support, and then we can go to resistance highs. Again, very classic stuff here on gold. So again, it's starting to unfold with a little bit more clarity. So we should be able to get some bullish, more bullish trades on there later today or this week. Bitcoin is doing what Bitcoin does for the moment. It's just playing silly buggers. We can see, again, a good example of what we're talking about. We had that kind of V-shaped pattern, the higher low, as price grinds sideways. We could arguably call this a flag type pattern. And in context, if you look at the daily chart, you've got that, again, most people might consider that a bear flag. Again, one of the things to keep in mind is that the names of these patterns can change in real time. And again, we've already seen, again, on the 60-minute chart, the name and shape of the pattern change. But the reality is, contextually, nothing has changed. Price is meandering sideways. It is consolidating. And the name and shape and what you might name that consolidation has changed several times. And this is why I don't really worry about what the name of the pattern is. For descriptive purposes on my video, the blog, training, I've got to say and call it something. Again, usually I default to it's a consolidation. Or meandering sideways, or prices. I'm usually more descriptive, but sometimes these patterns really look obvious, and what I try and do is point out the obvious, where, hey, until something new happens, the same thing's going to continue. So what does something new actually look like? Something new is going to be a breakout of the consolidation zones, very similar to what we looked at on oil. Yes, we've got this head and shoulders pattern. It's usually associated with a reversal, but the reality is it's a type of consolidation, so until it breaks one way or the other, we're never really going to know, firstly, what it's called, and then we'll know only that after the fact. So don't get hung up on the names of these types of patterns. Focus on the, what it's saying. Price is compressing. We've got consolidation at this location. A break in either direction will decide whether it was accumulation or distribution. So rather than try and guess what was going on at that moment, just follow the footprint that price action tells you, and your life and trading is going to become a lot simpler. So I'll leave you with a line from the statistician George Box, which traders should probably tattoo somewhere visible. All models are wrong, but some are useful. And the whole point of the Bitcoin read, that was essentially the whole point of the Bitcoin read. And a little bit in oil as well. The channel, the range, the head and shoulders, the overall the consolidation, whether it's a cyclical bull or a cyclical bear run, the label is just that. It's a type of model that we can look into. And every model is wrong the moment the next candle prints, or to be fair in this case, several patterns. The name of that change or the model that we're using changes consistently. And we only know afterwards, looking backwards, when that model is cast in history, that we know what it's actually called. So don't worry about the names of the patterns. Just focus on what phase of movement. Is it trending up? Is it trending down? Is it meandering sideways? So they're the three things that are most important, the phase of movement. And a timely fun fact for us, as we mentioned, Keir Starmer has resigned as the UK Prime Minister, but since that has happened and he's handed in the keys to number 10, spare a thought for the benchmark that we're now measuring against. Liz Truss holds the record for the shortest serving Prime Minister in British history, lasting just 49 days back in 2022. She famously was outlasted by a 62 pence Tesco lettuce, which the Daily Star live streamed beside her photo to see which would wilt first. And that lettuce eventually achieved... So I'm just laughing about it. I'm in the UK if you're watching this in the future and you can't tell by the accent. But basically, this is what happened. So the bar for the Prime Minister, the Premiership as it turns out, basically is a salad that hasn't actually turned. So I find that quite amusing. Again, it's something that we'll probably come back to. The UK's having an absolute nightmare when it comes to the leadership. I mean, we could argue that the US is having some of its own difficulties, but we just can't find anyone with a backbone at the moment. So as soon as we can get that back in place, get the country back in shape, then that will be a fine day that we'll all celebrate. Lastly, but by no means least, the meme of the day. Leave it on a happy note. You can read it there. But that's all for Monday. That's the peace deal in tatters, the war trades in chaos, clocking back in. None of that really changes my job. The plan is to follow the plan, follow the setups, mind the risk, and make some cash along the way. So with that said, I will see you on the next installments. Bye for now.